On this week's episode of the Investors Corner, me and Mike will be giving you a property market update and giving our opinions on how we see it currently compared to what you're hearing in the media. Mike will be talking about buyer demand, current house prices, and what his predictions are for the rest of this year and into next, while also talking about what could potentially happen with the base rate in the coming weeks. I'll be talking about the letting side of things. So, what are average rental prices currently doing? What's the current inflation rates for rentals? Also, I'll discuss some key things on what the government could do to keep landlords in the market and stop them exiting from their buy-to-lets. I'll also give you an update on the Renters Reform Bill and what's currently happening with it, because we haven't seen any movement on it from 4 months ago. So make sure you're listening. This is a must episode for any property investors out there, and make sure you subscribe to our podcast. So, Mike, just me and you today.
The way it should be. The way it should be.
Where's Ian? Any ideas?
It's somewhere across the country, in a hotel near you.
Run it 100 miles somewhere?
Who knows? It's probably before breakfast.
Yeah. So, I think it's important to do this podcast because we've heard a lot of stuff and seen a lot of stuff on the media side of things in regards to stuff that's happening in the sales market, stuff that's happening in the lettings market. We haven't done an update for a while, so I think it's important to get stuck in on what's happening on the sales side of things. What is the true numbers that we deal with on a daily basis, and also what's happening in the lettings market. Obviously, it's a busy time in lettings, inflation still going up on the lettings prices. So yeah, just let's give the listeners an update on what's going on, and if we see things differently to what they're seeing in the media, really. So do you want to kick things off with sales then, Mike?
Yeah, absolutely. So national picture for the number of houses that are looking like they're going to sell this year. We're obviously 9 months into the year now. So with your pipeline of listings or under offer and what's already completed, we know what's going to happen for the rest of the year. Looks to be around about 25% down on the last couple of years. Now, estate agents in particular have short memories, almost as short as the media. When 2 years ago we had a stamp duty holiday and the whole world was saying, well, it's a stamp duty holiday, so if you're thinking about moving in the next 2 or 3 years, now's the best time to do it. Everyone said we're going to have a massive increase in sales go through, and then the next couple of years are going to be really lean. Well, that's true. That's exactly what's happened. It's not because the market's crashed. It's because a lot of people who were going to move this year did it 18 months, 2 years ago to save 12 grand in stamp duty, and fair play to them for doing it. They moved their large sum forward. Incidentally, got incredibly good mortgage rates, fixed themselves in and moved themselves on. So a lot of what we've seen for the house and the number of house sales that have gone through is a reflection on 2 years ago. The number of sales actually going through this year broadly mirrors 2018, 2019, a couple of percent down on that. So it's a very normal market. So whilst inside the industry, I'm seeing people closing offices, I'm seeing people do this, that and the other, and blah, blah, blah. They were the same agents that were buying Range Rovers 2 years ago and saving nothing for a rainy day. So it is what it is from that perspective. The change in the market for the quarter is a little more interesting reading. We've seen interest rates continue to rise to the point where now, if you're borrowing £100,000, that's going to cost you £500 a month to service the interest. So for every £100,000 you borrow, it's costing you £500. So to borrow £400,000 to do a serious upsize is now a really, really big decision. That's a massive decision compared to when it was costing you £100 a month to service that interest, and that £100 fell out of your back pocket, didn't even notice that it had changed. It's now going to cost you £1,000 to £1,500 a month to upsize your property. So the people who are moving are really serious because they need to move, not because they want to move. It's a need. You've changed area with your job. You've had another child. There's been a change. You've had an inheritance. That kind of thing is proving people to move. So if we run through from the end of May through to the end of August, so sort of 3 to 4 months solid statistics, I pulled Rightmove statistics because it's our biggest incoming lead producer into our agency business. Leads, so if you go onto Rightmove, you click on a property and say, yeah, I want to view that, or you phone through from Rightmove, which is a trackable phone number for us, leads have been down around about 35% through the quarter. Right. There's 2 reasons for that. First reason for that is it's got more difficult to buy a house for the reasons that I've just said. Second reason is you've gone from May, June, peak market, to a summer holidays market where we're in residential, suburban southeast England. Half of our clients are spending 2 weeks in Greece or Spain or Tenerife or Mauritius if they're doing a little bit better. So you can take the 35% drop with a pinch of salt, in my opinion, and that will re-increase. The number of views of property listings on Rightmove hasn't dropped as much. It's down about 9%. So there's 2 things to take from that. You could take it in 1 or 2 ways. You could say, well, people are still looking at houses, so when they're back, they're then going to put that inquiry through and things will bounce back. Or you could say people are looking at the properties, but they're not inquiring. Therefore, they're either too expensive or not attractive enough, as in the price isn't right. Because everything always comes down to the price. If a house was £1, regardless of what it looked like, you'd buy it. Yeah. So every reason is always price related. So you could say, well, people are going to bounce back because there's still a lot of people looking. Or you could say, well, people are still looking, but they're not inquiring. So prices are now too high. So prices need to take another step back in order to fire the market. And the number of listings against what's selling is also indicative of that. So as an agency, we were selling 85 to 90% of our listings month on month. August, that dropped off quite significantly. Again, partly because a lot of your buyers are away, partly because it's now too expensive to borrow money at the prices that you were previously borrowing at. So that's where we are with the sales market. We're looking forward to a normal seasonal bounce through the end of September up to October half term, before we then see a slight pull away through Christmas. But as a business, we saw record exchange and completion business in July. We saw another record on exchanges and completions in August, which means people are pulling out of sales because of perceived market problems. People are going ahead with it when they make the decision. There's just less people who are inquiring in the first place. So you have to be keen and you have to be competitive.
Yeah, but just on the pricing side of things, because I know you like a scroll through Rightmove to see what's on the market and see
I'm the same as the rest of them. First, sit down at your desk and get a Rightmove over to see what's going on.
Absolutely love it. I mean, pricing-wise, do you see stuff on the market at the correct pricing, or are you seeing a lot of stuff out there that isn't correctly priced? And we're getting good results because the way we deal with things is we correctly price it. But I know that we've seen some stuff on there that is just wow.
You see some ludicrous, absolute ludicrous prices across the board, and there's a number of reasons why. It's not about agent bashing, to be completely honest, because sometimes the agent is led by the seller, and you could say, look, it's the agent's job to tell the seller they're wrong, but at the end of the day, that's the way it is. There's different ways to get on to selling your property. There's pretty much self-service options now, so if people are going to do it, they're going to do it. I think if you had your house valued 9 months ago and you're now coming to the market, the price that you were given 9 months ago should be scribbled out, tip-end, burnt, and everything should be started again. And I think sometimes that's where clients don't understand there's a market change, and agents don't appreciate that there's a market change. They just do the job that's easy and say, well, we priced it at 400, let's go at 400, rather than we priced it 400 9 months ago and it's now 375. Yeah, because we have seen that drop. And if you do want to sell, don't worry, because what you're moving on to buy will have also eroded by £20,000 to £25,000.
Yeah, no, absolutely. I think some sellers obviously overprice their own property because they've got a connection with it and feel like it's worth more than it actually is. And because obviously costs have gone up, they might need a bit more money to move and to upsize and all of that sort of stuff. So
the big warning for anyone selling their house at the moment is don't chase the market. It's a phrase that we use internally in a estate agency, is that if you price your house over the top, you'll then end up reducing it to what it was originally worth, but you're 2 to 3 months further down the line where house prices may have dropped 2 to 3%. So you're then dropping below what your original achievable price was. You're chasing the market down because you started too high. You've basically, it's like being a runner in 100 metres with a pulled hamstring.
Yeah.
You're going to get further away. You're not going to win.
Yeah, no, absolutely. Well, we've got the next base rate review coming on, I think, around sort of end of September or something like that.
22nd, 23rd of September, whichever Thursday it is around there, yeah.
Yeah, what's your thoughts on that then? So if it increases, do you think that's going to have a negative impact on the sales side of things, or...?
I think it's pretty much nailed on that it will increase because my savings accounts have already gone up this month.
Yeah.
So every time my saving account always goes up 10 to 14 days before interest rates go up because the banks know what they're doing.
Yeah.
They've got an inside track. So they're not just raising my interest rates on my savings for the fun of it. They know that the base rates are going to go up. So they're pricing. The interesting thing is a lot of mortgage companies are now seeing there's less business to go around and are getting more competitive. So mortgage companies are only small amounts but cutting rates. So I don't think a Bank of England base rate will vastly affect new borrowers, but obviously those on the standard variable rates get nobbled every time it happens. And I think it'll raise this month and potentially one more time, so another 0.5% this year from where we are before we get into the new year. And it's almost a clean slate to see what happens because interest rates will be matching inflation at that point at around about late fives, early, around about just under 6%.
Yeah, no, absolutely. Well, let's watch out for that. I'm sure we'll have another update on that when it happens to give the listeners the update and make informed decisions on when that happens.
So where are we on lettings?
Lettings, well, do you know what? Every day I get surprised by lettings.
Yes.
The prices that are being demanded for these properties is just increasing. It's sort of an unknown market, lettings, at the moment, where we could, be confident in valuing a property for lettings. It's sort of what do you need to get for it, and more than likely you will get that for it.
It's almost as if, looking at it from the outside as I do, the agent isn't setting the price.
No.
The market is setting the price. I see you putting what you see as expensive on a rental, and then coming back 2 days later where 4 tenants have offered you more than that.
Yeah.
So it's like you can't even keep a lid on it yourself.
Yeah, and that's the current market that we're in with lettings. It's you've got the demand there, you haven't got the supply there. People are in competition with each other to rent these properties, and that is the market. So many people think that, landlords are demanding this rental price. Landlords don't at all. They don't have a clue what that property's worth. We don't know what it's worth until we launch it onto the market and see 40 inquiries come through the property, 20 viewings lined up, and it goes from there, really. So just looking at the market, just to give some figures on what average rents are doing, inflation rates are doing as well. So looking at average rents in the UK, it's around £1,261 a month now. So previous month was 1,243, and the previous month to that was 1,229. So that still shows that average rental prices in the UK are increasing. Now, excluding London out of that, because London has a big part to play at those average rents across the UK. Excluding London, we're currently looking at £1,051 a month. Previous month to that 1,037. Previous month to that, 1,027. So again, there's sort of a big difference when you include London and exclude it out.
But the increases are similar.
Yeah,
Sort of 2 and 3% a month.
Yeah, it's around, the monthly variance is around 2% on average. And average inflation rate at the moment for the UK is 10.3%. Excluding London, it's 9.4%. So around in July time, that was slightly higher at 9.8%, excluding London. Now we're at 9.4%. So it's sort of come down a little bit. I mean, what's driving these rental increases is, like I said before, it's the demand. You know, the months that we're in, it's the highest demand months for rental properties. You've got record number of sort of immigration levels coming through. You've got more people renewing their tenancy, and you've got more people looking to rented accommodation because they can't afford to buy. So that's where all of the people are coming in, and a lot of landlords are exiting the marketing. Like we've spoke before, probably about 100,000 landlords that are exiting each year. So the tenant demand is up by sort of 38% this time last year, but the supply is around 18% down.
So the 50% swing.
Yeah, so that just shows that.
So a man with common sense said it's going to be a 50% price change when it washes out.
Exactly. So it's just crazy at the moment. I think the things that we're looking at on why landlords are exiting the market. There's been a lot of conversation on the renters reform bill, and that's why landlords are exiting. My opinion on it is it's more to do with tax issues and costs. Because when you look into the renters reform bill, all right, there's some stuff there that we all won't agree on, but there's some good stuff in there as well to help tenants and landlords. So it's not all that bad. So I think the renters reform side of things, it's there, but it's not the main cause of landlords exiting. You know, when I look at the tax issues, we've got stuff like capital gains tax, extra stamp duty, you know, no more
Section 24,
in interest. So it's just those things coupled with the renters reform bill why landlords are just thinking, is this actually an investment now? I mean, what are your thoughts on that? On, is property, renting out a property and having a buy to let, is that an investment to have right now?
I think it depends who you are, and this is what I'm seeing from the outside, is a highly geared landlord doesn't work anymore because you can't offset the mortgage interest at the right rate for it to work. And if it's now costing you £500 a month to service £100,000 debt, your mortgage is likely to be £1,000 on a property that rents for £1,250, £1,300. So you're never going to make any actual financial profit, and you're going to get taxed as if you're making a profit. So you're actually going to pay tax on a loss. So I don't see that it works in the short term for the highly geared landlord. The short term is not why you buy a property.
No.
So the flip side of that is I'm seeing more seasoned landlords or cash buyers moving into the market because they see a gap, because they see that people with low deposits, 20 to 25 to 30% deposit landlords, shying away, and a lot of older landlords retiring. Now's a good time to get into the property market. There's a few less first-time buyers around. Money's more expensive. Well, if I've got cash in my bank account, I'm the king of this market, so I can actually make some moves. So auction buying is busy. At the moment. So a lot of properties going to auction, but they're selling. The sales ratios are really, really good. So I think the answer to your question, is it an investable asset? Yes, but there's a big but. It depends who you are. You've got to be in the right place to do it, to see yourself through over the next couple of years. Otherwise, you'll be paying into that. And whilst, if you listen to the podcast regularly, I see no problem with having to contribute towards a buy-to-let because you pay money into your pension. So paying money into a buy-to-let is basically the same thing. You don't want to if you don't have to.
Yeah, no, absolutely. Well, just going back to the tax side of things and what things that could be done to make it easier for landlords to keep landlords in the market and get that rental supply up. So I've looked at sort of 6 things.
This
Really.
is Andy's bid for Chancellor.
Yeah, it is. It is. Do you know one of the things that I read the other day was Michael Gove saying that landlords are absolutely vital to the rentals market and we need them. And it's
First truth that he said for a while.
yeah. So what are you now going to do to make that happen? Right now, not really doing a lot.
No.
So I thought, right, let's have a look at 6 things. And these are taken from other people's sort of comments as well that I've seen. But 6 things that potentially that they can do to keep these vital landlords in the market. So, number 1, review taxes that apply to private landlords. So develop policies that promote long-term investment and reduce costs for tenants. So that's a good one.
Mm-hmm.
Good. Got your approval.
Yes.
Good. Reinstate mortgage tax relief. Obviously, that's a big one. So level the playing field between landlords operating in their own name, who are subject to tax changes, and those who are set up as a business who are not.
Yeah.
So I think we're seeing more landlords go down the route of sort of incorporating their portfolio into business for tax purposes. But not all landlords look into that side of things or know about that side of things. So if it was just level and easier to understand, then I think that is
a fair playing field.
Yeah. Reduce taxes on additional properties. So existing surcharges must be reduced and could be split so a lower percentage is paid by landlords looking to invest in the private rented sector and a higher percentage is paid by individuals buying second homes.
So we're talking stamp duty.
Yes.
So a reduction on that 3%.
Reduction, yeah.
But hitting the people who are buying holiday homes.
Exactly. I think that would sort of work. And it sort of have a
How do we distinguish a holiday home from a buy-to-let?
Not sure. Didn't really get
If
that
it's in
far.
Cornwall, it's definitely. If it's in Bracknell, probably not a holiday home.
Didn't get that far. That's something I will look into. So next podcast, I'll give you an update on that.
Do it.
Bring back tax relief for energy efficiency. So help landlords with the cost of energy efficiency work and ensure that tenants benefit from lower bills.
Yeah. It's never worked so far. All of everything I've ever seen has been a fad introduced by the government to say we're putting X amount of million behind this Green Deal.
Yeah, and then
and no landlord has ever claimed on it.
No. So they need to make it easier and more clear.
Straightforward grants.
Yeah.
For straightforward things.
Yeah.
Rather than sort of smoke and mirror policy.
Yeah. If you do this, this will happen. But in order for that to happen, you have to do X, Y, and Z. Yeah. And then when you do that X, Y, and Z, you have to do this. It's just, it's not clear enough, is it?
If you rent a property with an EPC of an A or a B, you pay less tax.
Yeah. No.
Like, straight.
Just doesn't make sense. That needs to be clear and do something about that. Reduce capital gains tax thresholds. So align residential property with other asset classes and remove the disincentive to invest. And that's a big one, isn't it, around the capital gains tax side of things for investment.
I've always thought of it the other way round, almost. Like I think the landlords at the moment are selling before capital gains gets worse. So are people selling now because of the fear of capital gains?
Yeah.
Because it can change at any moment. It's one of those taxes that they don't even back tonight. Like income tax, years of chat.
Because the threshold
very rarely change.
Yeah, no, I think the threshold's reduced, isn't it?
The allowance.
Increasing, sorry. So it's increasing. So if I think that's had a big impact on landlords as well, that they've got it in their heads that this is going to happen.
Yes.
And they get out now.
Absolutely.
As in, if we go back to how it was, reduce it even further, then you've got it in your head.
Yeah, when I sold my last buy-to-let, I had a £12,000 allowance, as did my wife.
Yeah.
So we had the first £24,000 written off and blah, 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 yada, yada, yada. We paid capital gains tax, but we paid it with a wry smile. There was profit made, so I was quite happy to pay some tax on it.
Yeah, no, absolutely. I think that's what majority of landlords should have that mindset as you. You know, get them happy to do something rather than against.
Yeah, I wasn't buzzing.
No, but
I was all right with it.
Yeah. Rent controls then. So this is something that I've seen recently about rent controls. I saw an article. I think you mentioned something about it as well, Mike, about having like a tracker, a rent tracker that clients have been asking agents to keep an eye on like the market tracker for rents.
I've seen in the media landlords asking their agents to produce contracts where the rent goes up in line with Bank of England base rates, so they're protected, but the tenant obviously isn't, which that blew my mind. I mean, if you're signing a year's contract, you agree that you agree what you're doing, just like if you sign a fixed term mortgage deal. Yeah, like crazy.
It's just crazy. Yeah, it's crazy. I mean, that was one thing, but you know, the government were talking about rent controls. It's obviously happening. Scotland doesn't seem to work that great in Scotland with the stuff that I've read from it. But avoiding rent controls, obviously the flexible tenancies that we have at the moment and the rent prices driven by the market, have led to the success of the private rented sector before. So why change it? It's just another thing that doesn't need to be done. I think a lot of this is being driven by sort of activists and the pressure that's put on that side of things. But
what does a rent control do? If they put rent control measures in place in Berkshire from next week, what happens to the market? What happens to tenants?
I mean, for tenants, I suppose that, you know, they know they have a figure that it can increase by. Whether tenants, I mean, every tenant that I've spoken to has never mentioned anything about rent increases, rent controls, how it affects them, or anything like that. So I can't see it having a positive impact on tenants, because tenants are always going to be there.
I'm thinking how it affects tenants is more landlords sell up, more people driven from the market, because they think, well, my costs can go up, my tax can go up, but my rent can't. So I'm going to sell now. Because rent controls, they say, okay, rent controls coming 2024, blah, 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 white paper, yada, 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 wait for it all to go through session in Parliament. You'll have absolute mass sell-off rental properties.
And then tenants will have less option. Because there'll be less property out there. But like I said about tenants, is this something that tenants want? My opinion is probably not, because all of the tenants that I've spoken to have never mentioned it, never had any issues before with rent. So I suppose it depends what type of person you are, what type of agent you are.
Yes.
You know, there's agents and people out there that are going to take the mick. I mean, they're just going to ask for a rent increase, £500 a month. Right, let's be realistic. That's just stupid. It's not going to happen.
But I think we're working in a reasonably wealthy suburban market as well. So if rent goes up, your tenant spends 5 minutes on Rightmove, realises the market.
I understand it.
Signs the contract and cracks on because pay rises have been decent across the board. There's not mass unemployment. There's not mass changes. The economy's reasonably stable where we are. So people have almost had to take it. It's a bitter pill to swallow. Granted, I don't want to make it sound like a smaller thing than it is when your rent goes up, but it's a bitter pill to swallow. But people generally have taken it on the chin, just like most homeowners have taken their increased mortgage rates on the chin as well.
Yeah, exactly. Everyone knows that the costs have gone up. They do their own research now. And, you know, what we do is, you know, we give comparables to them of what's happening in that market, those type of properties, what's currently on the market, and they totally understand that it needs to be done. And if you have that evidence and you speak to tenants about that and about rent increases, then it's no issue at all. So just whilst we're on the subject of tenants then, so just got some stats on affordability for tenants and what their income, how much their income goes towards rentals. So across the UK, it's now 32.3% of their income goes towards paying rent. It was at 30.1% previous month to where we are now. So there's been a slight increase on that side of things. Be specific to the southeast, because these numbers are a little bit higher. So 33.2% of income compared to 31.3% in the previous month. And then London is nearly at 40%. 40% of your income going on rentals.
I'm nervous above 33%.
Yes.
Because we run obviously referencing based on roughly 30% is affordable. Anything over that becomes unaffordable because you're paying council tax, gas, electric, water, general bills, food, childcare, etc., etc. With the remainder. If that's net on tax, I don't know whether that's gross or a net stat, but yeah, you wouldn't want to see it go really past 39%.
No, so I mean London. I mean you can see why more and more people are coming out of London, coming to around where we are in Berkshire. You know, Reading way, where it's easy to get access into London. You get sort of reduced rental prices compared to London. But London's just crazy. Yeah. It's just a crazy market.
Or people in London are better at hiding their income than people in the rest of the UK.
Yeah.
Sorry, to do that in your head.
Could be. It's just the last thing that I wanted to talk about was the Renters Reform Bill. So just to give you a quick update on this, because I know it's a hot topic. It's been a hot topic for 12 months now. And yeah, just an update of where things are at. Because 4 months ago it had its first reading. Everything went crazy. Yep. All these questions being asked. Negative media use. So right now, it hasn't had its second reading. Okay, it's not sort of scheduled to have a second reading in the House of Commons. They normally release it every Thursday on what they're going to discuss for that week. It's not on the agenda. Okay, so government are going to break up for the conference party, I think they call it, in September. So if it doesn't happen before then the soonest time that it can be discussed will be October the 16th. Okay? Then they've got a short period of time between October the 16th and November the 7th when the King does his speech on the government's agenda for the upcoming year.
Okay.
If it's not on that,
see where we're going here.
If it's not on that, then the whole thing needs to be reintroduced and the whole process starts again. So we could be seeing right now that no second reading is going to happen. It's not going to go through the next stages. And if it's not done by November the 7th and had its second reading by then, the whole process starts again. So we're back to square one. So that's where we are at the moment.
Clock's ticking.
Clock's ticking. You know, this whole massive thing from the government that we need to do this, we need to introduce it, let's get going with it. And they haven't got it on the agenda so far.
Okay.
So watch out for that.
It's not number one, is it? By the sound of it.
Not number one on the agenda. My thoughts are, my opinion on it is that it's had its first reading. All of the details came out. There was stuff within that Renters Reform Bill that needed to be reviewed.
Yeah.
And they take a completely wrong approach to certain things. And people have debated it and you know had their say on it, which has forced the government to review it, and they can't do it quickly enough because there's things in there that need to be reviewed in detail. So yeah, watch this space. The whole thing could start from square one. But again, once we have more details on that, I'll keep you updated. And then yeah, we'll take it from there.
Thanks for your time. Good one.
Lovely. Thanks for listening in. Make sure you hit the subscribe button. You know, we're bringing this stuff. This is free information that we're bringing you, where you pay thousands of pounds for getting that elsewhere, that information, you know, speaking to people involved with this industry. So yeah, Make sure you hit the subscribe button and we'll see you next week.
Why have we made the Investors Corner podcast, Ian?
I think online at the moment there is just way too much noise, waffle and nonsense. Everyone's got an agenda. So the goal was to make a podcast for people that want to invest money in property or other areas where there's no waffle, there's no nonsense, there's no agenda. It's opinion led, but it's an honest opinion. And it might not be the right answer, but we're going to share it.
So on the podcast, we're going to supply people with access to mortgage brokers, financial advisors, planning experts, development consultants, everything around the property industry and the wider fields.
Yeah, so if you're looking at investing in the future, you know that just having an income from your employer or from your business is not enough to give you the life that you want down the line. We're going to hopefully give you some of those answers that will give you the solutions you need for the future.
So please hit the subscribe button. The more subscribers we get, better guests that we can get on and the more people that we can reach. So hit subscribe.